Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Wednesday morning market webcast, he tried to say. I hope everybody had a great Christmas, very happy holiday. We're back today. We got today, tomorrow, Friday, got 3 full days. The volatility didn't stop Christmas Eve, and it certainly didn't stop when they opened the market up last night. We've traded as low as 23.1675. So I have been mentioning in the room, there are times when you break a round number and the market loves to see the next 100 handles very, very quickly. You could argue that 2,500 to 2,400 came very quickly. It did. It came in the span of a couple of sessions. Well, 2,400 to 2,300, the vast majority of it, basically 83% of it, has come within a session, and within a session where literally nobody has been around. So it's been thin. You've been able to push it around. Historically, that favors the bulls. This Christmas, certainly, it favored the bears. You're in a very protracted band right now, going on 7 sessions. You have a Bollinger bandwidth now that is somewhere in the area of 20. That's typically not sustainable, but a lot of it depends on the news flow. If the news flow is going to continue to do this to the tape, then you're going to see just horrific sentiment. You're going to see things, you're just going to see things continue to make lower lows. It was a short but good day for us on Monday. We did 20 in the overnight. We shorted the open. We took our profits there for like 23, 24 and change, and then we were done right around the time that it was making lows down there at 68. They took it back up to the area of 24.10, and they really violently knocked it down. So I just wrote down, it's taking the stairs down, and it really is. It's you have your FOMC rejection here at 25.92, and from last Wednesday at 2 o'clock. You have seen a solid, 360, 370 handles come right out of this tape. No, I need more coffee. 400 plus handles come out of this market. You see a series of new lows. You see mid-band get tested and remain resistance. We've been over the top of it here for the last couple of hours. You got daily pivot coming in around the 2372 area. These pops are going to happen. The pops are not what's important. And I will tell you right now, I will miss a lot of these pops. I have been. But what's important, and the reason we're up over 300 handles this month pretty comfortably with vacations and really not trading a ton, is we're much more focused on the trend. We were always focused on the upside, and when it was by the dip time, like sometimes you would miss some of these downdrafts, but you just had to understand that they were byproducts of profit taking, and they were going to result in higher lows, and you would just be there for the next one. Well, the inverse is true here. You want to be there for the moves down, because that is where the tape is headed. That's the general trend. These pops are going to happen. You're going to be in some of them. You're not going to be in others, but you have to understand these pops are short covering, and they are going to result most likely in lower highs, and lower highs in tapes like this beget lower lows, and that that'll keep you on the correct side of the freeway. What you don't want to be doing here is coming in and getting long and being stubborn and staying long. But that's not as bad as just being stubborn short in a bear market and ignoring the pops or disrespecting the pops, because what the pops will do is they'll bring you a quick 30, 40, 50, 60 handles. I mean, this is 23.16 to 23.69. If you get long the first, if you short the first sign of a higher low, and you try to hold on, from say 25 up through here and back, that's not a pleasant way to spend your day. And I would strongly suggest that you try to avoid that. So for the bear market pops, you can be long, you can stand aside. We've done a bit of both. But what you want to do is, if you're early, you need to recognize that you're early, accept the fact that you're early. Don't get stubborn, don't add, don't make it worse. Just step aside. step aside and wait for something else, or get long for the rest of whatever this pop is going to be. Don't be early short on bear market pops, because I'm telling you right now, we've gone from 25.92 to 23.16. One of these is going to hold up for a few days. I don't know if it's this one. I don't know if it's 10 pops from now. One of these is going to hold up for a few days. Don't unwind all that good work with basically getting ideological or getting stubborn when this thing is really due for some relief. All right, everybody have a fantastic day. I hope everybody had a great holiday. We'll be out with some more stuff on social. We are around today. We're going to continue what is already a fantastic week, and finish off a fantastic month and a record year for us. We will catch everybody then. If you trade this stuff all the time, if you want to come in and see what we're all about, come on in. We'd love to meet you, and I know you're going to like what you find. All right, take care, trade them well, talk to you soon. Follow us over on Twitter, Instagram, and Snapchat at Princeton Trader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade them well.